Good morning. This is Josh Hayes with Hedge Plus, and here's the market monitor for Thursday, July 10th. There's not much to hang your hat on right now if you are a bull in these markets. We've had another week of strong ethanol production. Pace remains strong. Pace remains ahead of the USDA forecast. Going into the last 2 days of this week and leading into this month's supply and demand report, it is expected that there'll be some level of short covering for both corn and wheat, considered to be oversold. You could argue the same for soybeans, except there's been more bearish news hitting that market there. These new tariff, rates and demands set to take place on August 1st are causing another disruption. Countries like the Philippines and Brazil hit with major tariff increases for not having secured a trade deal with the U.S. at this point. In particular, the Philippines is going to be hit with a 20% hike beginning August 1st, and that's a big deal because they're a major buyer of soybean meal. That's why you saw the soybean market drop so much yesterday. And then the 50% tariff that is being threatened against Brazil isn't so much a direct impact on our prices here, but what will happen is, initially, and it already has occurred, just on the Trump laying out the threat of the 50% tariff, their currency tumbled quite a bit, and that's just going to stay that way unless the deal is struck. And what that means in the short term is they're going to be able to sell more of their product. It's going to lower their prices. They've actually still been quite a bit higher than us, so that's going to place some downward pressure on the markets. You can also sense a lot of growing frustration in the ag industry itself. We all thought there'd be some major positives from these trade deals, and there definitely still can be. But so far, on the whole, it's been more disruptive than anything. In fact, there was 42 ag organizations that sent a letter to President Trump yesterday pleading for a chief ag negotiator to become part of these talks. There was originally supposed to be one appointed that never was, and the ag industry just feels as though their voice isn't being heard in these discussions. So definitely building frustration over trade deals. No reason at this point to think that the positives we foresaw and foretold and all expected, no reason to think that this won't come. But in the meantime, it's really hurting you guys. And when it's one thing to have the deals delayed, not really coming in time to help with old crop, but now there are certain aspects of these negotiations that are actually hurting farmers and hurting our industry. So we really do need a representation on this, and we really got to make sure that these deals end up with some favorable conditions for agriculture. Leading into the report tomorrow, not typically a very major report. The one thing that you might have heard Pat say yesterday on our Q&A is, even though it's very rare, the USDA does not typically change yield or adjust yield in July. It's only happened about 3 times in the last 30 plus years, and I think the last time was either 2003 or 2005, but either way, very rare. Just based on the conditions we've had, what we're hearing from you guys, and the conditions of your crops, he does actually anticipate, if the USDA is ever going to change yield this early, this would be one of those times. So we will see. Aside from that, the big aspects of this report are looking at where ending stocks are projected and what they do with production numbers. Taking a look at the weather, forecast has basically not changed at all. since I was last with you on Tuesday. Continued seasonal temps and good rains. No threat through the end of July on the forecast right now. Obviously, they can be wrong, and they have been many times, but there's nothing to at least send the market into any kind of short covering rally here, with no threats in the near or even midterm. In Europe, they are getting some rain. Heat's building into the west. One thing that's notable there is the hot, dry weather that has been basically parked over Europe for so long. The models are shifting that and have that moving uh, east towards Russia. So Russia is starting to build some heat stress, which is hurting their corn, helping their wheat, but something to watch there going forward. In Brazil, they are way behind on harvest. It's why their prices are still considerably higher than both ours and Argentina. But they are finally getting a long, dry stretch. This is the time of year they're typically always dry, but they hadn't been. And but that is drying out now, and it is boosting their harvest pace. So they're going to start bringing a lot more grain to market here real soon as a result. Taking a look at international prices, you can see we're very competitive. We are just a couple dollars more per metric ton than Argentina. Their prices finally started to come up a little bit. Soybeans, we are right there with them as well. And also with wheat, we are really close neck and neck with what's coming out of Ukraine, which isn't much. So these competitive prices would suggest that our exports will continue to be strong, might even pick up, and it should help to put somewhat of a bottom. I'm not saying the dive down that we've seen here in the past week is over, and the supply and demand report can definitely affect that as well. But this should show up at some point in the way of strong sales. And it's kind of a matter of if we're right there as low as anybody in the world, given our quality, there's no reason not to believe that we'll make some strong sales here in the next few months. Taking a look at overnight prices, corn flat to even, beans up about 1 to 2 cents, and wheat up about 5 to 6 cents. Compared to 48 hours ago when I was with you on Tuesday, corn is down. These are not good numbers. Corn is down 25 cents since Tuesday morning. Soybeans are down 45 cents since Tuesday morning, and wheat is down 13. Don't expect a whole lot of volatility today or tomorrow. If anything, like I said earlier, we anticipate a little bit of short covering. Hopefully, we can avoid any more bad news on trade, maybe even get some positive news and maybe get a little bit of a bounce. That's all for today, and that's all for this week. Tomorrow, we'll have Jason's Feedlot Focus, his weekly update on the cattle and hog markets. And then I will be with you again next week. Hope everyone has a great close to the week, and hopefully we get a good report from the USDA.